Hey, what's going on, you guys? Welcome back to another YouTube video. And on today's video, I do want to go ahead and share with you guys an option trading tip like I promised. I know a lot of individuals trying to get into option trading. This is a form of trading that has very little margin to error. When trading stock options, a lot of the capital that you're using is your own, and it's not like most other traditional forms of investing that some people are getting into, especially younger adults, like prop firms, where they allow you to play with basically simulated money or just risk a small amount of your capital and risk more of their capital, right? So in option trading, the margin is very, very small to make a mistake. And it's very punishing. You can lose a lot of money very quick. So I believe sharing tips that help you guys avoid losing money and avoid taking excessive risk when trading stock options should be very helpful for you guys. And there's a lot of, I guess you could say, tips that I've learned throughout my career and experience, so I want to share them with you guys. I believe that one of the biggest ones that I see oftentimes most people don't really talk about is avoiding trading the market open. So the market open is probably one of the most volatile moments of the stock market. There's a lot of institutional buying, a lot of reaction to narratives, reaction to headlines, reaction to economic data, and this is not the time where you want to go ahead and jump into the market just trying to predict what's going to happen. And I know a lot of individuals that are just getting started. Especially if you're a Pacific Standard Time trader. You are up early, right? It takes a lot of dedication to be up at 6:30 of the market open. For most individuals, I recommend that you guys kind of get a little bit started early in your days, because if you're already awake by 5:30, 6 a.m., you're allowed the ability to begin collecting news, collecting data, understanding market narratives that are going to help you, I guess, react and predict exactly how to make a more profitable trade with whatever asset you're trading, whether it be an ETF or an actual company. So I recommend you guys take the time to, I guess, let yourselves fire on up. Let your mind get some clarity, get some blood flow, and it's really important to get your mind in the right spot. Sometimes if you're a Pacific Standard Time trader, man, if you're waking up early and you're, just getting up at 6:30, 6:10, you're not going to be firing at the highest capability. You want to have your mindset clear so you can manage the risk and not make impulsive decisions. And a lot of traders, especially getting started, hey, they want to go ahead and jump into the market the second it opens, right? We're not up early for no reason. We want to make money. We want to go ahead and take quality positions. And that's where I really separate, a lot of traders from potentially being successful and those that aren't. It's those that seek quality. So there's individuals that just want to treat this like a form of gambling. They want the money to come in quick, which is also very possible. But you're going to learn as you mature through your option trading career that managing risk is going to be your best friend. And that period of 6:30 a.m. to potentially even 7:30, it's going to be the moment of the highest volatility in the market. If you're on a technical analysis chart, you're not going to have too many points that are consistent of supply where share price is going to be bought up at and buyers are stepping in, and share price of where sellers are going to be bought up and sellers are stepping in. So you have to really prepare yourself before, I guess, entering any position by collecting data. Don't jump in at the market open 7:30. Hey, learn a little bit of patience. Watch price action for the little period of maybe at the first hour or two of market. Now you understand, okay, at around X share price and around X share price, we have buyers and we have sellers. So you can navigate the trading day with a little bit more confidence, right? If you're just entering at the market open or those first hours of market, you're just practically guessing, and it just raises risk exponentially, and it's just not worth the reward. And as you develop into a better trader, you're going to learn to manage that risk. There's different components of managing risk. It could be through your strike price, it can be through your expiration date, it can be by chasing the right setup, it can be through navigating headlines, avoiding IPOs, avoiding earning reports. Those are some of the main tips that I will share with you guys. But one basic, very fundamental one is avoiding to trade the market open. Like I mentioned, very volatile moment in the market, and it's practically a gamble for many. I know it's very impulsive, very attractive, right? There's big moves, 0.5% moves for ETFs, sometimes 1 to 2% moves for companies. But if you're on the wrong end of that trade, oftentimes the capital that you're exposing, especially in option trading, it's gone and it's not going to come back. And I want you guys to preserve your capital. I want you guys to avoid losing as much as possible. So learning to just refrain from tracing that market open move, collecting some data, seeing the narrative, right? That's also one thing that I want to share with you guys. Every market day is different. You have to understand the bias. Is there more buyers in this day? Is there more sellers in this day? You know, how is the S&P performing? Is it a green day for the S&P, a red day for the S&P? This provides a lot of insight to understanding exactly how to navigate other sectors of the market. You know, that comes into a lot of, I guess, further analysis. And I recommend you guys begin to expose yourself to these perspectives, especially if you're going to be risking hard capital trading stock options. And one thing I'll also add is adding on to your fundamental analysis, right? Not just understanding technical analysis is going to take you much further in managing risk, because every single day there's new macroeconomic data. Japanese yen carry trade just a few months ago, how that impacted the stock market, right? We have Fed rate meetings, we have different market headlines, company headlines, political data. These all play a narrative in how the market's going to be performing. So the main goal as an investor or trader is to gather as much of this fundamental analysis, as much of this news and information to make the best possible decision. And oftentimes a lot of traders just base themselves off the technicals, because the chart, you know, identifies certain share price levels and you can see where buy orders and sell orders are using the order book, but it's not oftentimes too, I guess you can say, reliable if there's certain fundamentals missing or certain key points of data that can potentially impact that share price move. So something I want you guys to be mindful of, right? And I share this tip to hopefully help as many of you guys as possible, because I know getting into trading is already hard as it is. Option trading genuinely is what I call kind of the final I guess you can say form of trading. It really is hard capital. There is very little margin for error, and it's challenging, you know, especially if you're working extremely hard for your money. To just see minus $50 disappear in sometimes 3 minutes, it's very challenging when then you have to go work 2 hours to make it back. So, you know, I hope to share as much videos and knowledge and experience as possible to help you guys. And that's one really basic fundamental tip that I can share with you guys. Just practice that patience, right? Collect your supply zones, your demand zones for the day. Reference, you know, previous day price action. Hey, maybe I'm trading now Wednesday. Okay, Tuesday, what was the area of supply on Tuesday that I can expect for buyers to potentially act the same way on Wednesday? And now you're learning how to use previous price action data to make accurate decisions for the day. And that's how I recommend a lot of you individuals go about option trading. It's just about collecting as much data and minimizing the risk that you also expose, right? I'm not gonna say trading the market open is bad, but I know a lot of individuals that oftentimes are just risking either too much of their capital or even just at all, like taking any capital into the market open. You have to learn how to mitigate risks. Like, is this a very high risk trade, or is it a low risk trade, or is it a medium risk trade, right? Ask yourself that question before entering any position. I feel like it's gonna help you a lot in your career, because if you're just impulsively buying because you see certain price action or levels, and you know now you're putting in either an excessive amount of your portfolio, just always before entering, ask yourself, what is the risk behind this trade? Is it a great setup? You know, am I trading a narrative? Am I going against the trend, right? What am I looking to accomplish? And it's just going to help provide you more clarity. And I think that's one of the toughest parts when trading, because of course we're playing with hard capital and money here that is valuable to us. So emotions oftentimes do get involved. The best thing you could possibly do as a trader is learn to play an amount of capital where emotions are borderline detached. What does this look like, Jerry? Well, if you, let's say, have a portfolio valued at $1,000, you can potentially take a position worth $50, and it's not going to be the end of the world for you, right? You're not going to act the same way psychologically if you were to have a position valued at $600 compared to $50. A $600 position is now 60% of that portfolio. If you go up 50% or you go down 50%, it's too much, I guess, for some, right? This is just a normal retail trader perspective here, but it's very quick, and money like that for many individuals, it's challenging. You know, if you trade the market open and you go up 50% in the first 5 minutes, you think that you're gonna have a 300% trade. Why? Because there's so much time left to the market, right? And sometimes just being up that early, if you're on Pacific Standard Time Zone, it's tough. Like, you think you got it, you hit it big, right? And then later on, that trade can go negative 70, 80% in the next hour. So it's a really tough, you know, I guess, environment for traders to understand this, and that's why I help you guys understand that, hey, it's not really about just entering and exiting positions. It's about learning how to minimize risk and how much of that capital, right, you can expose to allow you to create a learning environment. You don't want to go ahead and risk an excessive amount of capital where now you're just focused on the money. You want to risk an amount of capital that you're comfortable with losing, not just comfortable, right? I always recommend taking kind of a statistical approach. How much percent of this portfolio are you risking? Is it 5% or is it 50%? The emotions are going to be a lot different with different percentages. So if you're risking that 5-10%, hey, I would argue maybe you are creating that learning environment where you can analyze price action, you can tolerate a drawdown on maybe a 0-day expiration or a certain, this is kind of specific to 0-day expirations because this is really where you're going to see the most risk with trading the market open. Something like an intraday or a swing, not too much, but still I recommend just collecting data as the main key point. But if you're trading 0-day expiration options, yeah, it's really where you're going to see the most fluctuation, and minimizing the capital exposure to allow you to maybe stomach a minus 30% or see your positions go positive 40, 50, 70%, right? I know some people that go into trades with $1,000, and I can tell when this $1,000 means a lot to them because they're closing their positions at 10%. They're closing their positions at 15%. Some of them at 5%, some of them at 7%. They're not letting them go up 20, 30, 40%. And that's oftentimes a sign that the capital you're exposing is just way too much. Size it down. Size down that position to allow you to, hey, if I lost 30%, it's not the end of the world. But if I go positive 30, 40%, I'm not just snagging out the win. I can navigate price action. I can navigate targeting certain share prices with a lot less emotions and a lot more, I guess you can say, control over where it is I'm looking to take my profits or setting my stop loss. And I hope that's kind of a really big piece of information that I wish I was taught earlier. As a retail trader, it's really hard to find credible information, but if you've already had this experience, you're gonna know what I'm telling you is genuinely helpful, and it'll help you navigate the market to be able to come out a lot more profitable than the vast majority of other retail traders. So I hope you guys enjoyed this video. Thank you all for your time. Jerry Trades, over and out.